Hello and welcome. You're watching Your Trades with me, Snehi Shah, and with me is Shrishti Sharma, and you're watching ET Now. Shrishti, well, what a day in trade today. Smart recovery seen on the Nifty. Good first day of March coming in for us, but you can never say too much when it comes to March because, well, the last month of the financial year, lots of tax provisions also need to be made by investors. You can never pencil in what's coming in for March, but let's talk about what happened intraday today. Nifty, what a smart move. Hit another record high today, closed at 22,338 thereabouts. Sensex also did pretty well, 1,245 point uptick coming in for Sensex. So brilliant move over there. Nifty Bank also more than 1,100 points higher today, 2.5% higher for the Nifty Bank as well. So well, I think we've compensated for the loss we saw yesterday, and how, right? Let's take a look at what the sectoral indices did. Metals was the biggest leader today on the back of sale, going up almost 7%. Metal was up 3.5% today, followed by auto. Auto sales numbers look pretty good. The auto index up 2.2% as we speak, followed by energy, PSU, banks and services. Realty also in the green as well. FMCG barely holding on to the green, but in the green nonetheless. But we did have three sectors that managed to end even such a good day in the red, and those are IT, media as well as pharma. So well, that's what the market looked like broadly today. Broader markets also sales, Suven Pharma, Metropolis Health, Oil India. News flows aiding all of these stocks in the positive territory today. On the other hand, Max Health, ICICI Lombard, Future Retail and Dr. Reddy's, these stocks have been in the red, and sharp cuts coming in for these stocks as well. But largely this is what the market setup looked like today. And what else was the focus today? Like I mentioned, Suven Pharma did pretty well. Suven Pharma surged on its merger with Cohance Life. We will be telling you more about this in the show as well. But that stock did pretty well for itself, up almost 10% at the day's highest trading point. Closed also with an uptick of almost 9%. Followed by that, L&T, that stock also did pretty well today, and a good day coming in for L&T as well, because L&T was up almost 4.5%. That rallied on a large order win, and India Q3 GDP beat was also one factor that aided L&T. But Shrishti, what else was happening? And I believe lots happening in the sectors that you track.
Well, yes, autos and pharma both were in focus. From the auto sales, we had the February auto sales data, wherein two-wheelers once again surprised us. Even the passenger vehicles space surprised us, but it was the tractor segment that was seen to be lagging behind, but nevertheless the cheer was across. But the hospital stocks were not in the pink of health, because the overhang that Supreme Court could actually go ahead and implement CGS's rates, this was a dampener today as well. Stocks like Apollo Hospitals, Max Healthcare, they were all seen to be drifting. Dr. Reddy's also had a negative news flow, where US antitrust case over G-Revlimid, and the stock tanked 4%. And Google to delist apps over billing policies was another headline we were tracking, and InfoEdge was the counter in focus. But a great day coming in for the markets indeed. But the big point is that, are we in to build on to more rallies and more upside on the benchmark indices, as well as what should be your strategy? What is the macro data developing at this point in time? So let's try and find out an answer to all of these questions with our experts for today. We are being joined by Rajesh Parvi on the technical front, and Ajay Bagga is also joining us on the fundamental side. Very good afternoon to both of you, and thank you so much for your time. But Ajay, I want to come to you first. It feels like clearly the GDP number was something that the markets were cheering at. Record high levels coming in for the benchmark indices. How do you see the momentum continuing? Because just the last month there was a lot of volatility. The direction was a bit nervous, giving some chills out there, given the correction in the small cap and the mid cap end of the market. But as of now, how do you see Indian markets placed?
What happened around the world in the last 24 hours? One, the US inflation number, the indicator which the Fed uses for its policy setting, the PCE, that came as per expectations. The markets had factored in a higher number, given what had happened on the US CPI and US PPI or WPI earlier for January, which had come higher than estimates. Yesterday, the PCE number came on track, and that lifted a lot of gloom. The markets were sitting, factoring in a higher number. So the June rate cut again came on board. And today, if you see, Japan hit a lifetime high again. The Nikkei reached near to 40,000. The US markets last night, the Nasdaq hit its lifetime high after November 21st once more, and the S&P 500 continued hitting one more lifetime high. So it was a global trend upwards. Today, Europe also is showing strength. India benefited that in terms of a very strong domestic macro on a changing global perspective, more positivity coming on the global asset markets. And India benefited with that. And on Friday, that's why we saw a very strong up move in the Indian markets. The shorts are quite embedded, and I think they were caught out today. But still, we didn't see a trap for getting set up fully. I think more because of the weekend, even though we have a contingency trading on Saturday. But I think the bulls held their hands, and I'm expecting next week, to hit 22,500 on Nifty and go further from here. So March is looking strong, Shrishti, as you said at the beginning of the show.
Well, right, Mr. Bagga, thanks for that view coming in. Mr. Palvi, I'm going to come to you. 22,000, 23,500 is where the next levels are being seen. What is your view, or 22,500, pardon me, what is your view here, and what is the next level that you are spotting? And also amid a market like this, which are the picks that you are picking out for our viewers?
So, Isni, in today's session, most of the call writers who were, wrote their, call writing position at 22,200 to 300. There is an unwinding action taken place that clearly shows that now the roadmap for 22,500 is very well visible at this moment, and we believe that in the continuation of this up move, yes, possibly we can see 22,500 very soon for Nifty. And again, the very strong comeback from the most of the banking stock, and Bank Nifty has shown very strong rally in today's session. And the major supply zone for the Bank Nifty was at around 47,200. That was crossed by the Bank Nifty also. Call writers have covered their riding position for strike of 47,000, 46,800. These all strikes were shown very strong unwinding action. So that clearly shows that Bank Nifty may also contribute to this rally going forward. So for Nifty, yes, we have target towards 22,500 in the continuation of this up move. One can keep their stop loss at around 22,200. For Bank Nifty, now if it holds above 46,900 mark, then yes, possibly Bank Nifty can extend its rally towards 47,600 to 47,800 also. Market breadth has improved. Lot many sectors have started now participating: metal, automobile, even OMC again, after a brief correction, all OMC stocks also started participating. So I think it's a broad-based buying action on the very first day of March series that clearly shows that this March series can have another round of rally, and we can see series of new all-time high also in this month also. Maybe we can see another new all-time high trajectory for Nifty.
Positive view coming in over there. Thanks so much, gentlemen, for joining us. And let's get a move on then, and let's slip into the word from the wise segment. And today we had Harsha Upadhyay, the CIO at Equity of Kotak AMC, and he shared his views on markets and the kind of returns the investors will get this year. Listen in to what he had to say.
Next couple of years, I think the landscape will be a lot clearer in terms of who is going to probably lead this space, etc. But I'm sure all the companies in the IT segment are looking at this change, and nobody can stop technology coming into reality. So to that extent, I think the opportunity is definitely in front of everyone. We need to wait and see how many of those companies will be able to capture that opportunity, and how soon. After several weeks, it's going to be quite event-free in that sense. So I think the flows and sentiments will dominate the market. So depending on the flows and sentiments, you will see the short-term movement in the market. But from a longer-term perspective, we still continue to be very positive on markets. We may not get the kind of returns that we have got in the last 3 years, but that doesn't mean that equities as an asset class will be inferior to many other asset classes. Equities will continue to really give decent returns in our view. just that the volatility could increase given higher valuations at this point. And returns, large caps have definitely underperformed mid and small caps. So many retail investors generally look at past returns and try to take positions. That's where we are making such statements indicating that this is a segment which is relatively better in terms of valuations. It's not that mid and small caps will not give returns or correct a lot at this point of time. It's just that from a risk reward perspective, probably it makes sense to have a little bit of tilt towards large caps, and that's what we have been suggesting to most of our investors.
All right, so that's the take coming in from Harsha Upadhyay. But with this, viewers, it's time to slip into a very short break in this edition of Your Trades. Don't go anywhere. We'll be right back. Welcome back to Your Trades on ET now, and let's talk and shift focus about the stock of the day. And today the stock move on Suven Pharma is what we were tracking. The stock was up anywhere between 8 to 10%, and that's on the back of the merger announcement with Cohance Life Sciences, which is another company which was owned by Edwin, and the private equity firm Edwin used to hold around 50% stake in Suven Pharma. And now with this merger, since both the companies were held by the same promoter, the PE Advent share in the merged entity is expected to go up to 66%. But the street was indeed excited about this merger. Why so? Because though Suven was trading around 30 times 1 year forward multiple, the merger was actually done at a 30% discount of the valuation given to the Cohance Life Sciences. That means that Cohance Life Sciences was valued at 8,000 crores of enterprise valuation, which was actually lower than what the street was giving the valuations to Suven Life Sciences, and the investors were happy with this particular discount, and that's why we did see an excitement coming in on the stock price. We also spoke with the management, where they also highlighted that in the first year itself this could be double-digit EPS accretive. So let's go across and listen into Suven Pharma's management.
We move closer to our vision of creating a diversified end-to-end CDMO leader from India. This is something that we had the vision right from the beginning when we took over Suven. And also the very important piece of this whole strategic deal is that it provides a consistent and stable, profitable growth, and it won't be as lumpy as what currently the business is. And also, very important thing is that now we will have multiple engines of growth, particularly 3 distinct business units: pharma, CDMO.
Well, all right, let's get a move on then. And while the market did pretty well today, there was one stock that was beaten down and out in trade today, and that was Agrotech Foods. That stock was down 18.5%. Now, Conagra Brands will sell its entire 51% stake in Agrotech Foods to Samara Capital and Infinity Holdings. My colleague Somit is here with all the details on this one. Somit, take it away.
Well, if you've seen a surprise move, the existing promoters of Agrotech, that is ConAgra, has decided to sell their entire 51.77% stake to private equity investors, that is Samara Capital and Infinity Holding. But what is more intriguing here is that the price at which they are selling this stake. The existing promoters are selling their stake at a price of around 515 as compared to yesterday's closing price of 998 rupees per share, which means that they are selling their stake at a steep discount of nearly 48%. Now, given the fact that the private equity investors are acquiring such a large chunk from the promoters, they're also making an open offer for the public shareholders to acquire nearly 26% stake, and that is being done at a price of around 578 rupees, which is at a discount of nearly 42% to yesterday's closing price, but at a premium of nearly 12% compared to the price that they have offered to the promoters. Now, what does this mean? Now, this is kind of negative for the company's stock prices, given the fact that it is being done at such a steep discount. This kind of indicates that the promoter believes that the real share price value of Agrotech is at around 515 rupees. Now, some background or details about this company is offered. If you see, the financial performance of Agrotech has been quite weak, owing to weak volumes and value growth in edible oil and food business. Now, the edible oil business contributes nearly 39% to the top line, while the food business contributes contributes nearly 61% to the top line. However, analysts have mentioned that the company was trying to revive the business by taking various steps, like they were shifting focus to food business from the edible oil business. They had also started to invest in brand building, and they were also emphasizing more on improving their distribution footprint and product penetration. Also, do remember this stock is owned by the Rakesh Jhunjhunwala family. They own around 8% stake. Tata Mutual Fund owns close to 7.3% stake, while an FI investor, that is Pari Washington Funds, also owns close to 10.6% stake. And this company was incorporated by ITC, and over the years it was sold to ConAgra. So keep an eye out for Agrotech Foods in trade.
Well, thank you so much, Somit, for getting us all those details. But moving on, let's shift focus to the auto sales data. Good set of numbers coming in for the February month, wherein we did see a surprise coming in across the segments except the tractor division. When we talk about the passenger vehicle segment, we have seen a double-digit growth on a YOY basis from all the three listed companies, M&M, Tata Motors as well as Maruti Suzuki. Commercial vehicle segment, we were not expecting great set of numbers, but a surprise coming in indeed from Eicher Motors VECV. 7,424 units is what the company reported. That's a growth of 2% on a YY basis, but it's a single-digit decline for Tata Motors commercial vehicle as well as Ashok Leyland, so not much cheer them. Two-wheeler segment, Bajaj Auto, TVS, Eicher Motors, Royal Enfield, great set of numbers coming in. So the festive season and the sales momentum continues even after the festive sales as well. And we were also highlighting that because of the marriage season, there could be a push coming in on the auto sales. And lastly, from the tractor division, disappointment coming in for M&M tractors as well as Escorts. Both the companies disappointed with the numbers for the month of February versus our estimates.
Well, all right. And earlier in the show, we did touch upon some stocks that were buzzing in today's trading session, the likes of Suven Pharma and more. And Shrishti also mentioned a whole host of auto stocks that will be in focus today. But what are the other stocks that were buzzing on the back of the good market move that we saw yesterday? My colleague Gaurav is joining us with a roundup of all of those stocks. Gaurav.
So first let's talk about CG Power, because the company formed joint venture with Star Microelectronics to build outsourced semiconductor assembly and test facility in India, and the JV is going to invest almost 7,600 crore rupees in the next 5 years, and CG Power owns almost 93% in this JV, and on the back of this we saw the stock was up almost by 6% in today's trade. Let's also look at Landmark Motors, because the company expanded its geography in Ujjain with MG's dealership, and this is again in line with the company's strategy to expand into new geographies. And on the back of this, we saw the stock was up almost 5%. L&T was another stock which was up 4.5% today, because the company won an order from Ministry of Defence worth 5 to 10,000 crore rupees for high power radars to Indian Air Force, and at the same time brokerages like BNP Paribas maintained its outperform rating and a target price of 3,967 rupees. So with a bullish view, we saw the stock reacted positively in today's trade. Let's also keep an eye on Dilip Buildcon, because company recently got a letter of appointed date from NHAI for an order worth 1,995 crore rupees for highway project, and on back of this we saw the stock reacted positively. And lastly, let's also keep an eye on Hindalco, because we have seen that the stock reacted recently on a negative trajectory, and after the correction, CLSA believes that this stock has a potential to go up from here on, because the existing business remains strong with gradual improvement in the profitability visible for CLSA. And on back of this, they have upgraded actually to buy rating and maintained the target price to 635 rupees. And we also saw the stock reacted positively in today's trade. So definitely let's keep an eye on all these stocks in tomorrow's trade as well.
Alright, with that, it's a wrap on this edition of Your Trades from Shrishti, me and the entire team that put the show together. Thanks so much for watching. We'll see you tomorrow.